Hi friends, today I'll explain you of liability of the customer in case of unauthorized electronic banking transaction, unauthorized debit to customer's account. So what is the liability, what is the process, how to when any unauthorized debit is there in your account, how to intimate the bank, all those things I'll explain you. And so many people, they are making a mistake. So somebody want to credit into your account, then authorization is not required from you. Authorization is you have a debit card and you have inserted into the ATM, you entered the PIN, means you are authorizing the transaction electronically, you are authorizing. So in this situation, if you make a wrong transaction also, you are authorized transaction. So lot of people, they are making mistakes. They'll receive some link, they'll say amount will be credited to your account, please enter the OTP. Always when your account should be debited, then you have to authenticate the transaction. If somebody is crediting your account, account authentication is not required. Unauthorized transaction resulting in debits to the customer accounts in criteria determine the customer liability. So maybe knowingly, unknowingly, there may be mistake at the bank side, there may be negligence at customer side, or negligence at third party. So sometimes customer accounts will be debited, because now lot of electronic digital transactions are happening. So previously, your account should be debited means you are physically go to the branch and give a check or withdrawal form, then withdraw money. But now lot of digitalization happening, lot of transactions happening without going to the branch. So it may result some unauthorized transaction debited to customer account in those situations. So what should be your liability means, what is the loss for you, and whenever there is a unauthorized transaction, what is your action should be, how to intimate the bank. These things I'll explain today. So normally now two type of transaction. One is online payment transaction, that you can do it from internet banking, mobile banking, card not present transaction, prepaid instrument. All these are online remote payment transaction. Face to face means customer physically carrying the card or mobile phone to ATM or point of sale machine, and physically you are entering your card into the system, and then you are entering to the PIN. So these are the face to face contract transaction. For the online transaction, physical presence is not required, but face to face transaction, customer physical presence is required. So systems and procedures. Now already we have discussed, because of lot of digitalization. So many manual interventions are removed, and some people, they doesn't know the process. So they some frauds are happening. Some people are misleading the customers. Okay. So to eliminate these things, banks have introduced systems and procedures. So for example, robust and dynamic fraud detection prevention. So detection is, so what is the fraud happen? Prevention means before happening the fraud, we want to prevent, to stop the transaction. Mechanism to access the risk. Okay, so mechanism assess the risk, and if there is any gap in the present system, present software, they'll fix immediately, and they'll stop. If some fraud has happened, immediately they should have some parameters to stop the transaction. Appropriate measures to mitigate the risk, protect themselves against liability arising. So mitigate, how to reduce this risk. Risk is unpredicted, something may happen in the future. So how to mitigate that one? So banks or financial institutions, they are taking appropriate measures to mitigate the risk. So what happens, risk means it is not only your money, sometimes reputation risk. For example, your customer data has again sold to some third party, then it is a data risk. Then your bank or financial institution will be in a reputation risk. So new people, they'll afraid to open accounts in your organization, because there is no proper security. A lot of risk is there in your organization. So for example, if you are going in a you are driving in a small colony, so risk will be less. So when you are going to center of the city, then traffic will be more and risk will be more. The same time, when you want to drive on a national highway, because lot of lorries and heavy vehicles will be traveling, so risk will be more. So the risk means it in future it may arise, may not be arise the risk. So risk will be uh, directly, indirectly it will be a loss for the organization. So how to reduce that loss is a mitigation plan, a system of continuously repeatedly advising customers on how to protect themselves from the electronic banking and payment related frauds. So a financial institution, a bank, repeatedly advising customers through SMS, through when you log into mobile, how to uh, themselves protect from these type of frauds. Okay, so banks or financial institution repeatedly advising customers to protect from the frauds. So okay, you have taken all the measures, but some unauthorized electronic transaction happened. So customers advised immediately these details should be report to the bank. So to report, the bank has given lot of channels. Go to bank website and you can report your problem. Phone banking, through SMS, through email, through IVR, or toll free number, or you can go to your home branch and you can lodge your complaint. Once any unauthorized transaction happens in your account, through these channels you have reported the bank. Bank has to give a reply and with a proper reference number. So in these situations, any unauthorized transaction, what is the customer liability? Means what is the loss for the customer? So you have two types. One is zero liability, means any unauthorized transaction happens, banks will reverse the amount, where zero liability to the customer. But in some cases, it will be liability for the customers. So I'll explain what is the difference for the zero liability and minimum liability. So contribution fraud, negligence, deficiency in the part of the bank. For example, a negligence, or there is a flaw in banking software, or is a bug. Because of that one, any unauthorized transaction, whether the transaction is reported by customer or not. So zero liability for a customer, these amount will be returned. Okay. Second point, third party breach, where deficiency lies neither with the bank nor with the customer. For example, nowadays banks are hiring lot of third party organizations for the back end operations. Few situations data will be given to the third party organizations. So now there is no negligence at bank part nor the customer, but there was a unauthorized transaction, but lies elsewhere in the system. But this is not responsible for the bank or customer, but it is a third party. So customer reports to the bank within the 3 working days receiving the communication from the bank regarding another. So within 3 days, customer has to report these information to the bank, then zero liability for the customer. So whatever the unauthorized transaction happened, that amount will be reversed. So limited liability means previous situation, if transaction happened, everything will be reversed, but limited liability will be some loss will be for the customer. So loss is due to negligence by the customer. So here there is no negligence by the bank, but there is a negligence by the customer. Sometimes what will happen, you will go to ATM machine, and you will try for the money withdrawal, it will not come. Somebody will come and help you, you will share your OTP, but you know maybe he has done one transaction or two transactions, or it will happen a lot of times. you go to a restaurant and you will give the debit card to the service person, and you will say, okay, 1700, okay, this is my pin. You will give it to the service person. So in those situations also, some unauthorized transaction may happen. Here the negligence is from the customer side. So in this situation, the loss should be borne by the customer. But once unauthorized transaction happened, if you inform to the bank, from that time onwards, the loss will be shifted from customer to bank. So before reporting, the loss should be borne by customer. After reporting to the bank, that loss will be borne by the bank. So second one will be, already we have discussed, it is like it is not from the bank mistake or bank's negligence or customer negligence. This is because of third party. So 4 to 7 days after receiving the communication from the bank on the continuous sheet, the part of the customer notifying the bank such transaction liability to the customer shall be limited in the value of the amount and the next. So if it is a negligence from the third party, then there is a delay 4 to 7 days receiving the communication from the bank, then limited liability will be there for the customer. So in first scenario, so because of the customer negligence, the here third party mistake. So what is the amount? If it is a basic savings bank account, 5,000 is the maximum. For all other savings account, 10,000 rupees is the maximum amount. Current, cash credit, overdraft account, MSME account, all these things, 10,000 rupees. All other current and cash credit, overdraft accounts, if the card limit above 5 lakhs, then 25,000 will be, even though the loss is 1 lakh, but it is limited to 25,000 rupees only. So now zero liability and partial liability we have discussed. So now we have discussed 4 to 7 days. If it is beyond 7 days, so whatever the liability should be determined by the bank board. It is organization to organization. If it is not communicated or reported after 7 days, then bank board will decide the policy. It will differ from one organization to another organization. So third party breaches. So overall liability of the customer, if the third party breaches, within 3 days, zero liability. 4 to 7 days, the transaction value already we have explained. If it is a savings account, normal savings 5,000, other 10,000, 25,000. Beyond 7 days, as per the board, bank board, so they may decide the amount. So reversal time. So whatever the unauthorized transaction happened, so that should be returned. And even though banks has some insurance on those transactions, you have a now insurance is available for uh, cyber insurance also available. So if they get settlement from the insurance company or not, but it should be paid to the customer and it should be value dated. For example, the transaction happened 1 month back. So when you are giving credit, it should be backdated, means date should be uh, unauthorized transaction date, not the current date. So additional points. So what is the, so there should not be, for example, if it is savings account, there should not be interest loss because you are giving backdated impact. So customer will get interest for those days. If it is a credit card, there was an unauthorized transaction, because of that customer has not paid and due date has crossed. Maybe credit card department, they have levied some late payment charges, other charges, all the charges should be reversed. So board approval for the policy. See what are the policies. So whatever these frauds happening, these information should be available in the website, and taking into the account of risk arising the unauthorized debits in the customer account, owning the customer negligence or bank negligence or third party banking system frauds, third party breaches. Bank need to clearly define the rights and obligation of customers in case of unauthorized transaction. So specifically, clearly it should be communicated. And okay, shall formulate customer relation policy with approval of the board. Yes, and policy must be transparent. Okay, then these communication should be sent to customers frequently through emails, SMS, or whenever you log into the system, these information should be available, and the bank website also these details should be available. All these escalation processes, everything. Thank you friends. If you like my video, please subscribe my channel.